Good evening, everyone, and welcome to session recap 24th of August 2015. My name is Nenad, and today we will see if we can say see 5 different setups because market has been very volatile, and I think this was the most volatile session seen in years concerning Monday. So we need to be very careful now about entries. We need to have big retracements. I hope that you have made some money. At least the day was very profitable for me, and those are kind of moves which I like the most when there is a big trend going on. But you know, it never hurts to get additional retracements after that. But we need to see whether we will have any, because it's hard to say that market it made more than 300 400 pips per pair, but still we need some good retracements now to enter another trade. So far, guys, today's session, as I say, was a very volatile, and I will give some explanation during the webinar. But guys, one advice: when you trade markets, fast moving markets, do not try to counter the market, because this is the time when you can really lose a lot if you try to counter the trend. So I have seen many of the traders basically trying to counter the trend and trying to short every single retracement. That is not good, and that is not how trading is done. One thing which we will also learn during the courses of our webinars is that you should always trade with the trend. If you want to counter the trend, the most important thing is you need to have a reason to counter the trend. Not just because target was hit or whatever, you should counter the trend. I exactly specify today. If you read my, I will show you. If you read my analysis, I published it and it was visible on Admiral Markets website. I will show you. So if you read the analysis, the thing is, it clearly said that it could have some rejections at 1540, and that was the time where you should have maybe countered the trend. You could have made 50 pips additionally. So this is the analysis which was published today. So if you read this analysis carefully, okay, it said that okay, this was the target, and basically I said that in the zone we might expect some selling in the zone, and when this zone was initially hit, you could have made 50 pips. So this is the zone where you should have taken short entries, not here above. Here also H5 L5 H5 is basically the strongest resistance over there. And yes, it was a good short, but here the initial short showed here, so the price came exactly at 1540 zone and it was rejected. At least you could have made 50 pips. Now the time is to basically wait for retracements. You should not make any revenge trades. I know that for some of you this was a hard day, but here we are now. We will try to basically make something of this market. And as I say, the primary thing which you should always focus and focus yourself when trade is, do not counter the trade. Do not think just because euro or other pair surged 200 pips to the upside you should short it. Okay, you should always watch levels, historical price action, confluence points. That is how counter trends are made, not just by simple countering. Because if you do that, the chances are you might lose, guys. And you know that I'm always telling you the truth, the fact, because doing that will save you a lot of trouble, and doing that will save your account from future losses, guys, which is also very important, from future losses. Okay. Now, also what I would like to say is that if you want to basically try to go with a trend, you should definitely follow our analytics section. And that is why one of the reasons why I'm saying you this is I always wait for a retracement before making a new entry. Okay, I always wait for retracement. Making new entries within the trend is most profitable one. Then we can go with breakouts and finally with counter trend. Counter trend can be most dangerous one. Okay, now we will talk all of these subjects once we started our price action school. Now we are ready to proceed with webinar, and then I will of course answer your questions. Okay, so online education materials, they're developed by Admiral Marquez Estonia for a global audience. And the thing is that the information this session is not definitely suitable for everyone. If you want to get a corresponding information on charting conditions and any other detail, you should definitely visit admiralmarquezglobal.com, select your country, and contact appropriate entity, guys, okay? Also, one part of risk disclaimer is saying that this is risk disclosure statement, and by proceeding further with me, you're accepting all the risk with it. Admiral Markets also UK does not take any responsibility for this information. This is my opinion, solely my opinion. This is not the .co.uk website, it's a globalnews.com website, and this webinar is strictly for informational and educational purposes only, okay? So with having said that, basically we are ready to proceed. Just one quick note. Try to download Admiral Market Supreme Edition. Grab the free indicators, free expert advisors, which are part of Supreme Edition. It can help you a lot during trading, especially when then there is a correlation loss. And particularly today, I have shorted New Zealand dollar and get some 50 pips, although that was good for 300 pips, but it's good. Correlation tables are always good, because don't think that euro dollar will always go same direction with pound or with New Zealand. Okay, there are other reasons for loss of correlation, so use correlation table. You can download the traders room. Okay, before we begin, one quick question is what is the reason for 800 pips in 5 days? Gordon is asking. Well, the thing is, if you followed my tweets, I've been tweeting all day long about the things which I think that those are market movers today. The first reason is definitely China. China is the first reason, and basically we can also spot correlation between commodity pairs and between hard and soft commodity pairs and China. For example, New Zealand dollar and Australian dollar have really a great correlation with China, with Chinese index. You can watch Chinese index as China 50 index. So basically, equity market and stock market is in correlation with, of course, with Forex market. First and foremost, if you want to understand everything which is happening in Forex market, you need to understand the equities market perfectly, okay? It's always the truth that the first week of September should always be profitable with long trades on equities. That's the history. History usually repeats itself, okay? History usually repeats itself. Also, one of the reasons is that basically what I think is there is, we can call it investors repatriation, okay? That means that basically foreign investors are trying to dump the dollars, and that is also particularly true. As you can see, dollar has been dumped, and also because of the rate hike. We cannot see that rate hike is coming in September, probably maybe in 6 months or after. So investors are dumping dollars. So also you need to watch high yield bonds, because when high yield bonds are at yearly highs, the thing is investors want to dump high risk bonds. Usually when those things happen, they exit also from equities. Also, one of the reasons is also that Shanghai index closed session lower. That particularly went to initial spike in euro dollar, but you know that basically when there is covering, you need to cover with reserve currency. That happened with yen. Yen is safe haven currency. It's a reserve currency also, and that covering it was felt really on dollar yen, on Australian dollar yen. You should open Australian dollar yen, watch the year 2008, and see how the market crash compares to this market crash today. So as I always say, guys, Forex is not just taking random entries with charts. You need to watch historical price action. History repeats itself, and that is also the truth. It happened today. Also, one of the moves or one of the things we justifies the move is that correlation with DAX index. DAX fell today by 7-8%, and basically that caused also surge in euro dollar. Later, when there is a correction, we saw algorithms. It's called algo. So algo trading happened. Basically, algo entered the market to correct the price, and later we saw some correction within the price. Okay. So all those things you need to understand before taking any entries with the Forex market, any entries with equities, and fully understanding the complex of all these things is of utmost importance. Okay. Now we will concentrate of course, with the Forex market, because we are primary Forex traders. I particularly do not trade stocks. I don't trade equities, but I try to learn about all these moves and try to understand correlation between Forex market and equities. Concerning these kind of trades which we have been doing here, okay. We need to just remind us of our risk disclaimer concerning our trades. So you need to give price a breathing room. Usually you enter within 5 to 10 pips of the predicted level if it's in agreement with your system. So only if it agrees with your system, you should enter the market. If there is no agreement between yours and my view, you should definitely stay away from the market. Okay, that's simple as that. Okay. One additional thing is what I want to say is we only take one position, guys. Do never ever forget it. Okay, we only take one position, whichever hits first. We have trend trades. Trend trades are usually our best trades, and trend trades are usually done within the first 3 hours of each session. Okay, respect your stop loss, add a spread to your stop loss. Also, depending on time and volatility, usage of trailing stop is highly recommended. We do not take profit below 20 pips. So 20 pips is the minimum for a profit, not less. These setups are usually valid for today, tomorrow, and sometimes the day after tomorrow. Pay attention to my Twitter updates. I usually post my updates via Twitter. Live updates, of course, the analysis is posted every day on Admiral Markets website, Forex Street, and Forex Factory. But also, it's important to say that concerning session recap trades, updates are done on my Twitter account. Also, pips pool is the maximum available number of pips you could have made with recap entries. Okay, so it's not necessarily that I have made those number of pips, but that means that you could have made, that is the maximum number of pips you could have made according to my analysis. The question, and then I will proceed to past week results. Can you tell me if euro will go back down? I need to know if I should exchange right now my dollars in euros in my country, or I should wait. Well, you know, it's a hard question. I don't want to prejudice anything. The thing is that it should go back down, but now it has a lot of things with Chinese market. Now, definitely, as my colleague said and my friend trader said, it's Greece has been just a sideshow, and the real concern is China now. So I don't know what can I say. The only thing what I see now is 1.18 is the level where we could short. But the thing is, I'm not sure that it will go to test 1.10 and those levels, guys. I cannot predict that far in future. It depends on major economic releases, on macroeconomic things. So the best is you should wait, okay? So it's an open question. My Twitter account is tarantulafx@gmail.com. Okay, so if you're still not sure, which is my okay, my email is gmail.com, and my Twitter handle is the same, is TarantulaFX, so it's my Twitter handle. Be sure to follow me because I always post real-time updates, okay? So, previous week results, Euro dollars 40, GBP dollar 95, Australian dollar didn't qualify, Euro yen 25, dollar yen 30, total pips pool 190, and for this week, be careful, market is very volatile, guys. So our last session recap and first in this season was basically very profitable, especially pound dollar. I forgot to put it here, so it was the trade of the week, okay? This was the plan for euro dollar last week, and you could see that we could made some nice profits by shorting, by longing at 10.50, and initially we could have made at 40 pips of profit. I know some traders call me and send me emails saying that they are very grateful for the analysis because they didn't close the price. Obviously they went with my entries, but they didn't close the price. They put this going and they told me they made more than 400 pips. And guys, well, if you are one of those guys who have held this trade, great. I particularly didn't, because you see, this was also the place where if someone forgot to take it here, it was also selling zone. But as I always say, we only take one trade, so this was the first trade. But you can see that, well, it went out perfectly. Oh, well, trade of the week, pound dollar, definitely. Pound dollar buying from 50. Basically, what I wanted to say, I was tweeting about buying around 55, 30, 40. You remember, but the thing is, now it's a hypothetical question. Some people longed at 55.50 and they made a ton of pips from this trade, but I particularly have focused on shorting here, okay? So basically it was a sell at 57.00 and initially the price gave us 95 pips, okay, before even making further down. So some people took it here, I took it there. I always say only one trade, guys. Do not take both trades, although very often we can have both trades profitable, but do not be greedy. Take those pips and enjoy. So this was the trade, which was the trade of the week, okay, from this spot on, okay. Australian dollar, well, it didn't qualify, but I always say watch the trend. If I say downtrend, try to short it. Yes, the price didn't qualify. It came to 73.90. It came only 10 pips short from our potential entry, but it went down. You see, it went down, okay? It went down. Euro yen, buy position 37.50. Well, the price came to 56. That was in the zone, okay? And then we could have made some nice pips, more than 40 pips. Well, I closed it somewhere here, but we could have made some nice pips initially. Well, you see here, that was maximum number because the price then went down, but I managed to grab 20 pips. It made some 25, 30 pips. And dollar yen, initially, again, it was good. 124.20, bang, it went to the upside, and it was down, down, down. After the FOMC it went down, but initially it was good. Okay, initially it was good for at least 30 pips. So as I say, guys, when you see that price is ranging, close your trade, grab something, do not wait for the major news. Okay, so we had a great week, okay, successful week. Now we need to concentrate on further moves, particularly, as I say, going with the trend today was very profitable. And the comment, Darshan, Darshan, I hope you address some exotic pairs once in a while. I made over 13,000 pips on GBP New Zealand long. Had a breakout long on dailies with TP on monthly. Well done, Darshan. Well done. 1300 pip, sorry, 1300 pip. It's 1300. Okay, so it's whole lot of pips. Excellent, excellent. Yes, I definitely will take exotics into account, and one of setups will definitely be GBP New Zealand. Douglas is saying poor sound. Guys, can you check that sound is okay? Because from my end it seems that it is okay. Yeah, sound is fine. So probably there are some, Douglas, there are some problems with your PC. Maybe you should restart whatever, or maybe close background programs, because sound should be okay. And Darshan is excited. Sound well, yeah, it's I'm very happy when you really, especially you, Darshan, you are one of our old attendees, and you are very you're always having good comments and definitely very funny. So yeah, GBP New Zealand. Well, also Australian dollar yen. I definitely need to cover once in a while those pairs, and I will do that. I will do that. I promise. Yeah. GBP New Zealand, it's maybe that is the strongest pair in the terms of moving ATR, so moving per day. So it's huge ATR. It's huge. You see, euro dollar made, let's say, okay, it made something like 300, 400 pips, right? GBP New Zealand it's always 2 times or 3 times euro dollar. So it really moves a lot. It's a fast moving pair. It's dangerous if you're not aware of it, but we should cover it definitely. Now, theoretical questions. What will happen with all those pairs? Now, guys, as you know, I always want to wait for deeper retracements. I don't like to trade when there is uncertainty in the markets. One thing which I can say, maybe we can be certain, is that euro dollar is now in a good uptrend, and we could try to buy the dips. Carolyn is asking, do you never trade breakouts? Yes, Carolyn, I'm trading breakouts, but not so often. But yes, I do. I trade breakouts. The thing is, I don't like to present you only breakouts, because breakouts are not as good as trend trades. They can be fast enough for you to make scalp trades, fast trades, but sometimes that can be fake out. If I spot a good breakout, I will tell you. So far, you should not be fooled. You should not be faked out. You should wait for retracement, because after every big move, we should have a retracement, and usually that kind of retracement should be big, okay, big enough for us to cover the cost, big enough for us to cover any losses, or to safely get into the trade. Okay, so this is now, guys, what we can basically see on euro dollar. You see the strong selling candle from vicinity of H5 is telling us that this could be the time for retracement. Okay, this could be the time for retracement. If this candle is to be believed in, we should get well, we need first to see the close of this candle. This is definitely a pin bar, and this pin is telling us that there are all sellers here. And if you open a weekly chart, guys, you can see that here, you see how history repeats itself. This is the place, historical place, where euro dollar was sold. Okay, the history repeats itself in Forex market very, very often. So this is the history. This is history repeats itself, and this is what we should be focused on. Pin bar rejection implies that there can be a strong sellers here. I personally would love to see it to sub 1500 levels. I would like to see, if you ask me, these levels here around H3, because this was the breakout point. Breakout here, okay? You see, breakout here, sort of a pullback continuation to the upside. But this was the major breakout point. Quadruple top was broken with strong candle here, and that was the time where we saw 1500 breakout. Now what I would like to see is retracement on euro dollar, and that retracement in 1460. 1405 is stop loss, 1600 is the target. If we get 1720 first, I would sell it with 70.50 stop loss and 1600 the target. The primary motive for this is retracement, and definitely POC is here. POC is here. We have 38.2, which is indicative of strong trends. It's not deep retracement, because usually when trend is strong, strong trend, we have also shallow retracement. The exception is when the trend is extremely strong. Correction can be extremely strong too, and that can give us 78.6 and 88.6. Because we have already went through all of these levels during the August, you can see range all the way last month. I don't expect euro dollar to fall to these levels. Mind you, however, if euro dollar falls to 12.50, it will also be bullish. Do not underestimate the power of charts, okay? So if euro dollar falls to L3, and today's pivot point, of course, yes, tomorrow it will be historical pivot point, this will also be uptrend, but I don't expect it to fall that hard at this point. As I say, this is now strong uptrend due to those reasons which I've stated at the beginning of the webinar, but also it's because we need to see at least, you see, it's 23.6 is rejecting it, but I don't have so much confidence in it. I would personally love to see it here. It's better confluence, especially because it's H3. So 1460, 1460, 1405 stop loss, and 1600 is the target. So this is the plan for euro dollar. What about GBP? Well, GBP is also one of the pairs which had a range. Let me open the chart. Now GBP is in uptrend. It's ranging, we can say, but this range has been broken at this spot here, because we have a candle close above 57.20. It went to 58. So the thing is, I think that this pair can go higher. I would love to see it at 56.90 to a buy. Then stop loss is 56.55. Target is 57.50. Okay, that is what I can see now. 56.90 is a confluence of these places here. Okay, a little bit lower than this spot on. Okay, so it can be a valid buy trade. and sell trade, I see it around 58.00 with 58.20 target, and 57.00 could be the target price. Okay, so again, 58.00 also shows history. If you see this previous price action around these spots, that was when GBP dollar was sold. Okay, we see some historical selling here, and I don't expect it to be a strong breakout of 58. We should at least get some retracement before next leg. As I say, pound is now, it broke the range. It's in uptrend, but it was ranging. So on 4-hour chart, we can see probable retracement. Okay, but we are still not sure if this retracement will go all the way to the downside. But you know, if you don't scalp, if you want to make intraday position trade, that is the safest way to go, or wait to get to this region and then sell it. At least you can end with some green pips, because that trade can be a scalp swing turned into intraday. Okay, so that is for pound dollar. Now Australian dollar. If you went with Australian dollar trades, which I have been posting previous week, I will show you, you could have made tons of pips. And I did it with my Forex Street exclusive analysis, I think it was, yes. I will show you triple confluence and resistance. So that is why it's very important to pay attention to this analysis also. If you shorted it from POC here at 7,350, you could have made tons of pips, and I literally mean tons, because it was good for scalps, it was good for scalp swings, it was good for intraday trades, and today, if you left, you can imagine, okay? And that was on August 21st, 3 days ago, guys. It was Friday, so okay. Same thing happened with Australian dollar is commodity driven. It has a lot to do with China. Also New Zealand dollar, it's hard and soft commodity. So basically it has a lot to do with China. So when Chinese market is crashing, Australian pairs will crash too. Okay, Australian dollar, New Zealand dollar. So I still expect this to go down. If it gets to 70 to 90, 50 pip stop loss all the way down to 72.00, guys. Okay. The thing is, if you watch Australian dollar, you can see that this was stop grab. Okay, I have written about stop grabs today, and this was a great example of a stop grab, which exactly happened today, and not just with these pairs, but also with other pairs. Dollar yen, Australian dollar yen. Okay, look at Australian dollar yen. It was a clear winner. If you got into shorts opening, guys, weekly chart, do you see a correlation between the historical price action here, okay, historical price action here, and the one in, I will show you here, in 2008. Okay, market crash happened in 2008. This is where you could have made great shorting opportunities. Okay, and the history repeats itself. So Australian dollar, I will be looking to sell at 72.90. The reasons are definitely previous double bottom L4 with 50 confluence. So basically we have a host of technical resistance here. So this level could be good for shorting into. Okay, so this is possible short on Australian dollar. Okay, 72.90, 73.50, 72.00 is the target. Okay, dollar CAD. Okay, making historical highs. Guys, dollar CAD. I will be looking to. Okay, I will open dollar CAD. Okay, this is dollar CAD. This is, by the way, this is called a rounded bottom. and ascending scallop pattern. So it's more of a rounded bottom now at this point. So guys, this is really uptrend here. Look at the dollar CAD. It's really very strong, and I would love to see a retracement 31.90, 31.60, 33.00. So that is basically what we are looking at. Dollar CAD I will show you now. Okay. Okay. Okay, this is very important for our candle. This is so-called master candle, okay, because it will contain next movement within itself, because next movement is determined by the break of this or this level here. So it can be determined by the break of the high or the break of the low. But the thing is, because we are in a strong uptrend, okay, 31.90 can be, okay, the first entry, and then we could go up. So it's close to our entry spot here. Or you can also see that the price has been broken through this previous swing point. Okay, so pay attention to this level. It's important. Okay, and watch the configuration here at this spot. Okay, this was stop grab here to correct the price. Okay. Okay, what did I want to say? 33.00 could be next target for dollar CAD. As I say, guys, be careful now. We had, for some people this was profitable day, for other people this was not so profitable day. So guys, just be very careful about it. Do not overtrade, do not overreact to news, do not revenge your trades. Be patient about your trades, and don't open the trades with big risk. Go with low risk. It will be better. Always try to trade with low risk. Dollar yen 122.30 with 122.50 stop loss and 121.10 target. Okay. So dollar yen, you see it's having a strong retracement now, and if we get it around this spot, okay, this was breakout retest continuation. Same on the 4-hour chart. I think it could be sold again, especially because if you watch daily chart, this is the breakout on daily. Okay, daily. So we could see here breakout, 4 hours showing same breakout pullback continuation, 1 hour showing the same. So one more retest could give us another good short, especially because dollar yen is more of a ranging pair when there is no major releases, and it tends to range more than trend. So we had a strong trend in dollar yen, but lately you could see every dip was bought. So basically now it seems that, as I said, investors are dumping dollar, dumping out dollar, exiting from trades, and we could see another leg of selling, I think, at this spot here. Okay, so those are the setups, guys. Okay, I will roll on through these slides again. Yeah, sell position is around 122.30, stop loss is 122.50, and 122.10 is the target. Okay, or you can make it 55. Okay, I will correct it later, so you can make it 55. Okay, so this can be actually 55 here. Okay, 55. Okay, yeah, sorry, I will correct it at the moment. Yeah, I was, well, making typos. You know, all day has been hectic for trading, and basically it's a typo, so this is it. Okay, guys, so once more, roll on the slides, and if you have any questions, you can ask me. Okay, euro dollar, pound, Australian dollar, dollar CAD, dollar yen. Okay, so that's it. And now the questions. Can you please look at euro yen? Sure. Euro yen. Okay, guys, so open 4-hour chart and see that this is M. Breakout trade could be at this spot here. So if you want to go with breakout, 137.05 should be broken. And if it goes down, it could retest this level here. So breakout trade, this is called a piggyback, because you will be, if you enter a trade, you will be riding at the momentum of this strong 4-hour candle. So if piggyback happens at this spot, okay, you will be definitely riding the momentum from these candles. So I will memorize. This is excellent example of a piggyback. So I will definitely print screen and snapshot this, because this is one of the things we will be learning on our price action school. So piggyback, if you are if you see M pattern and you see a strong candle which has already been sold but later bought from the support, next break is riding the momentum of this candle, but it should happen during next couple of 4-hour candles, okay, presumably during this or next day. So it could be a good spot to sell. So pay attention to possible piggyback, okay. Okay, so that is a euro yen. Okay, other questions? Euro AUD. Yes, euro AUD. Sure. Okay. Wow, strong candle, very strong candle. Watch this level, guys, for euro AUD. 58.30, 58.30, okay? This is weekly breakout, and this is weekly, possible weekly retest. So there is a possibility of a weekly retest at this spot, so pay attention to a possible weekly retest to the upside, okay? Pay attention to it, okay? Possible weekly retest happening here, okay? So this is the level where you should be paying attention to, 58.30, okay? Euro, you see strong selling here, pin candle, and a possible retest at this spot, okay? So pay attention to it, okay? Any question if you have, okay? Do you expect euro more than 1.17? It depends, it depends. Today was a very volatile day, and I can say if 1640 is taken out, but we need 4-hour or momentum close above 1460, sorry, 1640, yes, we can expect. So watch for this level here, and if you see that market is going up, then rejecting, yes, it should go down above 17. Okay, so pay attention to this level here, for 1640 for next leg of upside. And for trend trade, wait for suggested retracement. Don't rush in an unnecessary trade. Okay. 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 So those are the recap trades. Dollar Swissy. Okay, dollar Swissy. I will open dollar Swissy. Derek is asking. dollar Swissy here. Okay, dollar Swissy, you see it went down in a huge momentum, and actually in dollar Swissy we can see here this was the main breakout spot on dollar Swissy. Okay, this one, breakout, retest, continuation. Now from this spot, breakout, continuation, we are drawing retracement. Okay, Derek? So probable potential safe short. Okay, this is what I'll be looking at. This region too, and possibly this region too. This also has a lot confluence here, but also this region has confluence. For the nearest resistance, this is it. But it's not very strong resistance, okay? So this is the spot here or there. Wait for retracement. This should be retracement, but still, you see, euro dollar is going up. This can be rejected from this spot because this is now resistance. Support turned into resistance. Okay? Okay, guys? Next question. There will be any buying of quantity of bonds from ECB quantitative easing? Well, at this point, I haven't read any news about euro dollar and quantitative easing or bonds buying. But the thing is, you should check with Bloomberg or Forex Live, or all those websites. They can give you some information maybe about it. At this point, Gordon, I don't have a question. I don't have an answer to your question because I'm not sure. Now, the thing is, ECB also needs to correlate with those market crashes. So I'm not sure what will be the mechanism to handle it, but definitely euro has a strong impact. Chinese market conditions have also strong impact on euro, and all those dollar dampening have an impact. So it will be probably decided per market moves. Okay. So it yet to be seen. DEX, yeah, DEX is very, very hard now at this spot. So maybe in the future I will analyze DEX again. Okay. Derek is saying DEX. Yeah, DEX fell 7% today. So you could, if you traded it, you could make something out of it. Dollar yen, it should be sell. Yes, dollar yen is sell position. Did I change it? Yes, sell position 122.30, 122.55, so it's a sell indeed. Yes, Goran, you're right. Goran is saying that Mario Draghi still does not want strong euro, and well, I'm not sure that euro is strong at these levels. So US also does not want strong dollar. So I'm not sure that euro is that strong at this spot. It was more about dollar because dollar was very strong, and US also does not want very strong dollar. So it's a mixture of all these things. It's always some sort of a mixture. Okay. What now, guys? Yeah, it's like some sort of it's called pandemonium. Yeah, pandemonium, definitely. So guys, this is everything for today. As I say, pay attention to Admiral Markets website analysis. Discuss it on Forex then with me. I always tweet, I always communicate with you. So I will be publishing, of course, next analysis during next couple of days. Let's see if some of the trades will hit. Be careful. And let's hope that we will have a great week. Guys, as always, do not overtrade. Thank you, and I wish you to trade safe. Okay? If you have any questions, send me an email. And yes, Arlie is saying a last question. Arlie Peter. Okay, Arlie, sure. Last question, definitely. Then we need to go because our German colleagues will have a webinar. So if you have a question, Arlie, it's good to ask me now. I said in Twitter. Yes, Twitter. Uh, yeah. If you have to secure the trade, yes. From time to time, I say secure the trade. There are a couple of ways how you can secure your trade. You can put your stop loss to break even. You can put your stop loss to break even plus 20. You can scale out. For example, if you are 50 pips in profit, you can scale out and put the rest on break even, or you can take the trade. So there are a couple of ways. It's up to you how you will secure it. But I help you by saying secure it. So you can choose from all these things how to secure the trade. So either from protecting your stop loss, putting it to break even, riding effectively free ride, then scaling out or taking 20 pips and putting your stop loss to break even plus 20, or maybe taking all 50, 60 pips, whatever is the pip count. Okay, that's it. Thank you for questions. Thank you for comments. Let's see if we will get another successful week. And I will be here with you soon, guys. Cheers and trade safe.